And remember, if you're 70 years old and you've got $1 million sitting in the bank, which is not an unusual phenomenon, you're suddenly making $50,000, whereas last year you made $1,300.
Yeah.
Right. That's a really big deal. So you can't deny that. Right now, will that persist? And ironically, this is one of the things I talk about with Warren Mosler, who is a good friend of mine on the MMT train, and he's been spot on in terms of some of these dynamics. Right. The point that I would make is, if the Fed cuts interest rates in response to any form of weakness, what happens to that $50,000? It goes back to $25,000 or to $10,000 or to $1,300, depending on how severe they go. And so this process can work in reverse at the exact same time that the companies that would like to refinance, or the individuals who would like to refinance their home, suddenly find themselves unable to do so because economic conditions have deteriorated.
So you don't believe traditional easing will actually do that much easing this time?
It has to be a very large number, right? And that is one of the real challenges, is if you think about where I have to ease to before I can begin to lower the interest expense for companies that borrowed in the high yield market, right? The vast majority of coupons for the high yield market, for example, are about 5.5%. That's the rate that most high yield companies are currently paying today. If I go out into the public market and I look at the yield that those same bonds are earning now that they're discounted, right, it's around 8%. If I look at where credit models would suggest that paper should be trading, and we've seen incredibly low turnover and incredibly weak price discovery in those markets, right, it suggests closer to 12 to 13%. All those companies are bankrupt at 12 to 13%, right? So when you start thinking about that dynamic, what does it do if the Fed cuts rates back to 250, right? And high yield, the reason they've cut it back is because of economic weakness. So now high yield blows out to 550 or 600. Well, we're at 8%. And at 8%, guess what? That doesn't help these companies, particularly because their operating results have now deteriorated.